And I think corporate debt is going to suffer, and the central banks, they're not going to come to bail them out. We're going to see haircuts in corporate bonds, in my opinion. What are haircuts? Basically, they're going to change the terms of these bonds, the corporations, in order not to default. It's akin to a bail-in. Wednesday, December 10th, 2025, Maneco 64, home of alternative economics and contrarian views. Well, today we're going to look at gold revaluation and why I think it's going to be a must for the United States, especially with what the bond market is doing. And I think it could be a layered revaluation, and that's what I'm going to try to explain to you today. Layered gold revaluation. And yes, and the bond market is in trouble, not just the U.S. Treasury market and, for example, the Japanese government bond market, but also corporate bonds all around the world. And we're going to look at what I think is going to be the way that central banks are going to react to that, especially for the corporate bonds. Before we do that, though, I just wanted to look a little bit at silver this morning, because silver is doing really well. We're above $60 in the spot. Right now, as I speak here, it's 7:20 a.m. London time. We're at 61.50. The high's been 61.63. So massive move by silver. One thing I would say, yes, many of you have been stacking, so have I, and you've got the miners and they're doing really well. One thing I've always said, when the market is not going our way, when we're seeing a big correction, and also vice versa, where we're now, try to keep an even keel. Don't get too cocky. Don't get too despondent either. And remember that the fundamental reasons why you hold physical gold and silver and you hold the miners is still there. And it's still early days, and you will also realize how important it is to hold gold and silver once we look at this idea of layered gold revaluation. So gold, some people might be wondering, why is gold not doing anything? Why we're unchanged at 4208 or 4,208? Well, don't forget, silver's been not only suppressed in nominal terms, but it's also been suppressed versus gold for a very long time. So this is a relief, so to speak. It's not going to be a one-way street, of course. And I see here that the gold-silver ratio has broken down definitively. Of course, that's good for silver. We're at 68.4. There's still a lot of room, of course, on the downside. And I see some posts on X that are calling for 10,000 gold and $200 silver, which would be 50 to 1. Those two numbers are very realistic, and they might not be enough eventually once you listen to my layered revaluation idea and speculation, just what I'm thinking they might do. What else is going on here? Well, the government bond markets, and that will help you understand what I'm going to tell you about the corporate bond market as well. Well, the government bond market is still in trouble. Of course, we have the Fed today. Yes, they're going to cut. We're going to have to wait for some of the comments they're going to make. But I think long-term yields are headed higher everywhere around the world. And we're seeing the BOJ intervene again. Our friend Dario, who I had on yesterday, he posted this morning, Takaichi might be panicking. That's the prime minister. But surely the BOJ got her back. Still, 800 billion yen intervention today. Notice how banks wanted to sell 4 times the amount of 1 and 3-year JGB to the BOJ that the BOJ offered to purchase. So it's not just the long-term bonds now as well. It's the short-term bonds, 1 to 3 years. The total number of interventions since July has risen to 156. And I can bet the Exchange Stabilization Fund in the US is probably doing the same, intervening in the bond market. So is the Exchange Equalization Account or Fund in the UK. But eventually the market overwhelms central banks. So gold revaluation. Yes, it's been a hot topic this year. Mainly because we've had people related to the Trump administration, like Scott Bessent, who's a gold bug. He spoke in an interview in November, even before the election, even before he even knew he was going to be Secretary of the Treasury, that he sees a global monetary realignment akin to the Bretton Woods let's say, agreement in 1944. Then you have Stephen Mirren. I think he's the head of the Council of Economic Advisors. He's become a Fed governor. He's looking for devaluation of the dollar. Yes, the Federal Reserve, even the Federal Reserve has published a paper in August by Colin Weiss about revaluation. It looked at international revaluations like they did in Italy and Germany, I think, in the late 90s, and how it would work. And we've been through all this. And of course, the statutory price at which the Treasury's 8,133 metric tons of gold, and yes, the audit hasn't been done, but I think the market accepts that amount, at least the vast majority of people. And I think we will see an audit. And who knows, they might even be adding on to that. But yeah, so all that gold is still valued at the statutory price of $42.22. That was set in 1973. And in 1972, they had set a statutory price of 38. Prior to that, it was 35. That price was set in January of 1934, 35. So it took quite a long time, of course, to revalue again. This is not something that's done every year or something like that. But once you start doing it, you kind of layer it. And why do I think they're going to layer it again? Well, because to do a big revaluation, a one-off, would be a big shock to the market, not just the gold market, but to the whole financial system worldwide. So they have to do it gradually, and they have to maybe also allow the market to do it for them, I would say. So yeah, they did it in 72 from 35 to 38, and then from 38 to 42.22 in 73. And by the time they did those, the market price of gold was already a lot higher. It was like at 85 or 100 when they did 42.22. And one thing that you need to understand is that once they reset that price or revalue that price will be the floor for gold. So gold has never gone back below 42.22 since 1973. And I think they could revalue it to around 4,000 or even 4,222, which would be 100 times the current price. That would give Treasury around $1 trillion of spare cash that wasn't borrowed into existence. it would give him 1,000 billion, yeah, or 1 trillion to work with. So I see that as probably the first revaluation, but that would send a huge signal to the market. And gold, the market price would probably be around 5 or 6 already. And then they could do another revaluation in a year or two to 7, and then another one to, let's say, 12. And I think it could go into the 20s. So that's why I think silver also, $200 is very conservative. $10,000 gold is very conservative. And why would this help? Well, this would not just help the United States, it would help the whole world, because major central banks, even in Europe, have a lot of gold. They're in trouble as well, their bond market. China isn't in great shape. So everyone would benefit from it. And yes, the Treasury could even take that windfall. Let's say they do it to 7,000 or 8,000. They would have an extra trillion, and so on and so forth. They could retire a lot of Treasury debt. They could keep some of it to spend. Yeah, just like we would if we sold some of our gold. We pay off some debt, right? We would spend some of that. We would hopefully also invest some of that. And yeah, that's how I see it. A layered revaluation. I think it's possible. I think it could happen. The first one could happen, or the first two. I don't know. I'm just like speculating here. We could see something to that effect before July next year. And why July next year? Well, because as Judy Shelton has proposed, if we have a gold-backed treasury note or bond, she calls it the trust bond, she'd want to have the first issue on July 4th, 2026, a bit of a symbolic, let's say, thing to do, seeing that it's the 250th anniversary of the signing of the Declaration of Independence. So yeah, that's how I see it. And that's why when people say 10,000 gold and 200 silver, yes, I think that's highly possible, but I think it could be very conservative. So what do we do as stackers, as sound money advocates? Well, I never thought I would say this, but you need to act like the central banks. You need to keep adding on to your stacks, both gold and silver. Well, central banks are buying silver now. And you have to do it in a calm, rational fashion, i.e. dollar cost average, or whenever you can add on to it. Don't do it with the emotion of greed, of thinking that you need to make money, right? Because you're not making money, you're making currency, a currency that's becoming worth less and less. And therein lies the reason also for this revaluation. It will allow not just the Fed, but also other central banks around the world to basically be able to carry the debt that they have on their balance sheets more easily. It will allow governments as well. And yeah, hopefully it won't be too disruptive for the general public, because we will see inflation. That's the other thing. They want to inflate, and most people won't see it coming. And that's why hopefully you are in a good position to protect yourself financially. And I don't think it's, of course, too late at all to buy gold and silver, physical gold and silver. And if you're looking to do it for the first time, or if you want to add to it, consider my affiliates. I have an affiliation with Miles Franklin in the US and Gold Investments in the UK. All the details are below in the description. Let's jump on to corporate bonds, because we need to go back to 2020, 2021 during the crisis, right? I don't even like to mention it, the P word. But suffice it to say, central banks crushed short-term rates, artificially lower to zero or even negative, and longer-term yields as well went down massively, not just government bond yields, but also corporate bonds. There was like the spread came in, and it was probably, I don't have the numbers, but there's a massive amount of borrowing, not just by the governments, but also by corporations and by individuals. And a lot of this borrowing was done on a 5-year basis, i.e. there were 5-year bonds or notes or loans. So if you add, let's say 2021, when it was at the peak of this, if you add 5 years to that, you get 2026. And if you add 5 years to 2022, where it also continued, you get 2027. And I don't know the exact numbers, but I've heard from friends that analyze things a lot, that there could be worldwide about $70 trillion worth of bonds, all kinds of bonds, right? That are due for, that are going to mature and are due to be rolled over. So what I'm hearing is that corporate debt is going to be in trouble. We're already seeing private equity and private credit in trouble. And I think corporate debt is going to suffer. And the central banks, they're not going to come to bail them out. We're going to see haircuts in corporate bonds, in my opinion. What are haircuts? Basically, they're going to change the terms of these bonds, the corporations, in order not to default. It's akin to a bail-in, right? Because bonds are just you putting cash there for a year, 2, 3, 4, or 5 or more. So I think we're going to see corporate bond haircuts. The governments are going to look after themselves, and the central banks, they're not going to come to the rescue of corporate bonds. And this is not just in the US, it's also worldwide. It's a worldwide problem. So I would be out of corporate bonds. Corporate bonds are like the plague, I think. And even government bonds, they might stay steady. They might do QE to buy them like the Bank of Japan is doing. But in real terms, in terms of gold and silver, they're going to lose a lot of value. And I'm not saying you should have 100% in gold, silver, and the miners, but you need to think about having it as insurance for your overall portfolio. And you might want to get rid of a lot of other stuff, but that's up to you. So that's how I see it. Yes, layered gold revaluation. That could be a big thing. They might call it something else. It's almost like they have a term, the central bankers, when they try to tell people or the markets how things are going to go. I think it's going to be the same thing. The first revaluation will just be a signal, forward guidance. That's what I meant. But some people might think, well, if they revalue it to 4,222, that's very low. I want it higher. But don't forget, that's going to act as a floor for gold. Gold is going to go ballistic once that happens, in my opinion. So there you go. A lot happening. There's a lot more to talk about out there, but we're going to stop here for today. And with that, I'm going to wish you all a very good day. Take care. Bye.